Welcome back to Alpha Recap. Energetic day in the markets, and we're here to break it down. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from a pretty choppy session.
So, quick headline sweep. Governance shock at a major energy name. Big swings in retail and robotics. A surge in cyber and space-related names. And a reminder that earnings beats aren't what they used to be.
Right. The tape was high dispersion all the way. Company-specific catalysts really dominated.
Let's walk through the biggest moves. First up, BP. Shares fell to about $7.15 after the board removed the chairman for what they called serious conduct concerns. That was a shock, and the stock dropped about 5 2/3% on the news.
Yeah, that tracks. Governance events like that compress multiples fast. Investors suddenly have to reassess continuity, strategy, and the board's stewardship, and that uncertainty shows up in price immediately. To add to that, governance isn't just PR. It can change capital allocation, dividend thinking, and even credit spreads if investors get nervous.
AutoZone was another headline. The company reported an earnings beat, but it plunged about 10.7% in what OneNote called the worst day since March of 2020. That really underlines the shift in how markets parse results, right?
Exactly. Beats don't guarantee rallies anymore. Traders are dissecting forward-looking language, margin outlooks, inventory tone, promotions, and non-store growth. If management hints at pressure ahead, the market punishes quickly.
Not a great day for that name.
No, it's a broader structural change in pricing risk for retail and distributors.
Switching gears, Pony AI, big mover. The stock jumped about 45% after management said robotaxi revenue quintupled year over year, and they raised sales targets, even though losses widened.
Honestly, I was a bit surprised by this one. Momentum and narrative can overpower fundamentals in the short run. A 5 times revenue acceleration is headline grabbing.
Wait, really?
I mean, when you step back and look at this, scaling robotaxi operations is capital intensive, regulatory heavy, and customer acceptance matters. Widening losses suggest aggressive reinvestment, but traders bought the narrative today.
Short reactions.
Right.
Wow.
The Pony AI move reminds us that narrative-driven rallies can be very fast and very volatile. Execution risk remains high even after a strong top-line print.
Cybersecurity names also stood out. Zscaler traded around $273.62 into earnings, and there was notable options positioning into the aftermarket report. Broader cyber peers were referenced around $324.09 and $422.28 in some coverage.
Options into earnings create a two-edged sword. Implied volatility usually ramps up, and gamma can amplify moves. So traders positioning long for a surprise can see big upside, or face sharp reversals if guidance disappoints.
Short pause before a number here. The market also cheered a SpaceX Starship test launch, and that lifted public suppliers and infrastructure names. Space-related equities rallied on the narrative, even though SpaceX itself is still private.
Exactly. That's classic narrative-driven flow. Investors tie the milestone to future contracts, launch cadence, and bigger addressable markets for suppliers, which can re-rate valuations in pockets.
And on macro, Dow futures initially rose after crude prices fell on hopes of a diplomatic deal with Iran. But the gains were paired as reporting stayed mixed. So geopolitical headlines flipped oil and energy leadership intraday.
Geopolitics remains a big short-term volatility driver. A single headline about diplomacy can swing crude, which then ripples into cyclicals and energy names.
Let's pull out the day's main themes. First, earnings and guidance increasingly drove intraday volatility. Beats didn't guarantee rallies, AutoZone being the prominent example.
Analysts note that forward commentary is now the key. It's not just the quarter you just reported, it's the management tone about the next quarter and any signs of margin pressure.
Second theme, sector narratives can be detached from fundamentals, at least for short windows. Pony AI and space names are the poster children.
Yes, momentum traders chase narratives. Long-term investors should separate the headline from the economics. Narrative spikes can fade, if execution disappoints.
Third theme, governance and geopolitics are potent volatility triggers. BP's chairman removal was a stark reminder.
Boards matter. A surprise leadership disruption creates real questions about strategy and capital returns, and that uncertainty gets priced right away.
Fourth theme, macro caution. MarketWatch ran an analysis noting that episodes of spiking S&P profits have often preceded market downturns. So robust earnings aren't a free pass.
Right. Some analysts argue these profit spikes could be late cycle behavior. Others counter that strong profits typically support equity values unless the macro context deteriorates. It's an unresolved debate.
Let's dig into a few of those disagreements. Are high headline earnings a signal of resilience or a late cycle excess?
Analysts are split. Some see strong numbers as evidence of corporate health. Others warn that double-digit profit growth can mask margin compression ahead or one-off boosts that won't persist. The nuance matters.
How should listeners think about short-term momentum versus structural losses, like with Pony AI?
Momentum players treated the 5 times top-line growth as commercialization evidence. Cautious analysts flagged widening losses, CapEx needs, and regulatory paths. Both views are valid depending on your time horizon.
And the options question. Does earnings week options activity represent smart hedging or dangerous gamma?
It's both. Options can be efficient to express a view, but implied volatility and gamma make earnings weeks risky. Traders need to understand how delta and gamma can swing quickly around results.
Okay, practical context. AutoZone's sell-off, despite the beat, signals investors focused on margin durability, non-store growth, and inventory tone. Pony AI's rise on 5 times revenue came with the caveat of heavy capital needs.
And Zscaler showed how options positioning can amplify moves. The implied volatility build into earnings is real, and the resulting gamma can create outsized intraday volatility.
BP's removal of its chair took the stock to about $7.15. That drop embeds short-term uncertainty about the firm's trajectory.
Yes, that's more than a headline. It affects investor confidence and could influence capital allocation debates going forward.
So what did this mean for different investor types today?
Momentum and event-driven traders benefited from short-duration catalysts, but faced gamma and headline risk. Fundamental investors were reminded to stress test cyclicality and margins. Income and value investors had to reassess payout risk given governance shocks and commodity swings. And quant or macro funds saw high dispersion that both created relative value opportunities and raised tracking error for broad indexes.
Practical positioning notes analysts suggested. Revisit scenario-based sizing. Watch earnings cues, not just headlines. Treat governance events as multi-week signals. Manage event-driven gamma risk. And keep crude and geopolitics in view.
Yes, scenario planning helps. Model margin compression, governance turnover, and commodity shocks to clarify risk budgets. And read the forward guidance closely. That's where volatility is concentrated.
Final takeaways?
First, company-specific catalysts are driving a lot of near-term moves. Second, narrative can trump fundamentals temporarily, but execution and cash flow matter for the long run. Third, governance and geopolitics can quickly reshape sector leadership. And fourth, elevated profits don't remove the need for caution. The debate over whether this is durable or late cycle continues.
Quick checklist before we go. Watch earnings language. Size for scenarios. Be mindful of options gamma around releases. And monitor crude headlines tied to Iran diplomacy.
Analysts note that disciplined scenario planning and cautious sizing are practical responses to the kind of dispersion we saw today.
Thanks, Josh. That was a great walkthrough.
My pleasure. Always useful to step back and connect the dots.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you next time.